In response to surging college tuition costs and mountain-high student loan debt, a powerful cultural narrative has taken over financial media. Skip college, pick up a trade, and secure financial freedom. On YouTube, TikTok, and news broadcasts, blue-collar skilled trades are praised as the ultimate economic life hack. Industry blogs and recruitment ads regularly broadcast eye-popping figures. You'll hear that the average master plumber or journeyman electrician is pulling down $90,000 to $130,000 a year, working strictly on their own terms, driving $80,000 custom fleet trucks, and enjoying complete immunity from AI automation and corporate layoffs. But if you look past the viral recruitment videos and run an actual financial audit on the bank accounts of working tradespeople, the illusion of easy blue-collar riches quickly breaks down. According to official Bureau of Labor Statistics data, the median national wage for licensed plumbers sits at $61,550, while electricians earn a median of $61,590. Why is there such a massive gap between the six-figure social media claims and the median tax return? Because headline trade revenue is not personal income. Before a plumber or electrician takes home a single dollar of net cash, their gross earnings are systematically eroded by 4-year apprenticeship pay scales. Massive out-of-pocket tool investments, heavy commercial vehicle expenses, steep self-employment taxes, and an uncompensated physical toll. Today, we are opening up the balance sheets of the skilled trades. We will break down the true cost of trade apprenticeships, map out the hidden overhead of commercial vans and tool suites, expose the massive financial gap between union and non-union work, and calculate the real effective hourly rate of a journeyman. Let's find out what tradespeople actually take home. To understand trade economics, you have to start at day one, the apprenticeship. Proponents love to point out that trade school avoids 4-year college debt. While that's true, trades replacement training requires a 4 to 5-year apprenticeship before you ever earn a licensed journeyman wage. As a first-year apprentice, you enter at roughly 45 to 50% of the journeyman wage rate, often earning just $16 to $20 an hour while performing heavy physical labor. Out of that entry-level wage, apprentices are routinely required to buy their own personal hand tool set, heavy-duty work boots, and safety gear, while paying night school tuition or union training dues out of pocket. Once a tradesperson reaches journeyman or master status and steps out independently or as a subcontractor, they encounter the capital equipment trap. Modern plumbing and electrical work require thousands of dollars in specialized power tools. Plumbers need hydraulic ProPress tools, commercial drain augers, and sewer inspection cameras. Electricians require expensive conduit benders, thermal imaging cameras, and digital circuit analyzers. Then comes the biggest capital expense of all, the service van, a reliable commercial work van, properly upfitted with heavy-duty shelving, ladder racks, and security locks, costs between $60,000 and $80,000. Add high commercial vehicle insurance rates, rising fuel bills, and rapid wear and tear from carrying 2,000 pounds of inventory daily, and transportation overhead alone can consume $12,000 to $18,000 every single year. If an employee tradesperson works for a residential service contractor, the company may provide the van and heavy tools, but in exchange, the contractor takes a massive cut of the billable hourly rate. The company may charge the homeowner $175 to $250 an hour, but the worker on the ground receives only $30 to $45 an hour in wage pay. This brings us to the fundamental divide in the blue-collar economy. Union versus non-union. In unionized commercial construction, governed by organizations like the IBEW for electricians or the UA for plumbers, workers negotiate a total package. An electrician might see a scale of $50 an hour in cash wages, plus an additional $25 an hour funneled directly into fully funded health insurance and annuity pensions. Now, to be fair, union tradespeople on the commercial side operate under a completely different model. Their total package includes fully funded healthcare, pension contributions, and strong hourly wages, often reaching the six-figure headlines you see online. But here's the reality. Over 70% of residential plumbers and electricians work non-union. For the majority of tradespeople, the union safety net simply doesn't exist. But in the massive residential service sector, union coverage is rare. These workers operate as non-union employees or 1099 independent contractors, meaning every dollar of healthcare, retirement, and disability coverage must be paid out of their own pocket. For independent trade contractors, the tax and insurance drag is severe. Self-employed tradespeople pay a 15.3% self-employment tax on top of federal and state income taxes. Because plumbing carries high water damage risks and electrical work carries fire hazards, general liability insurance costs thousands annually. Furthermore, workers' compensation. Insurance for manual trades is among the most expensive in any industry. State boards classify plumbing and electrical work as high risk, charging contractors up to $8 to $15 for every $100 of payroll, just to ensure against job site injuries. Finally, we must account for unpaid administrative hours. An independent tradesperson might spend 40 hours on a job site, but they spend an additional 15 to 20 hours a week driving to supply houses, writing estimates, invoicing clients, returning calls, and fixing unbillable callbacks. These hours generate $0 in revenue, heavily diluting their effective hourly wage. In white-collar professions, your primary earning years peak in your 50s and 60s as experience accumulates. In the skilled trades, your primary asset is your physical body, and that asset suffers continuous physical wear every single day. Plumbers spend decades kneeling on concrete, squeezing into tight crawl spaces, lifting 100-pound water heaters, and dealing with hazardous sewage lines. Electricians spend career lifetimes pulling heavy gauge wire overhead, working off extension ladders, and exposing their joints to repetitive strain. Knees, lower backs, and shoulders routinely fail by age 50. According to occupational health data, tradespeople suffer job site injury rates significantly higher than the national average. A single herniated disc or torn rotator cuff can instantly sideline an independent contractor for 3 months, erasing a quarter of their annual income if they lack high-cost private disability insurance. This creates what industry veterans call the 50-year-old wall. To survive financially past age 50, a tradesperson must successfully transition from field worker to project manager, estimator, or business owner running their own crews. Those who fail to make that jump often face declining physical output, mounting medical bills, and forced early retirement with limited savings. To uncover the raw economic truth of the skilled trades, let's run a definitive, real-world annual balance sheet for an established independent journeyman plumber or electrician running a single service van and generating $95,000 in gross client billings. We start with our gross headline revenue of $95,000. First, we deduct vehicle operations, commercial van payments, fuel, insurance, and maintenance take $11,500. Tool maintenance, replacement, drill bits, and consumables remove $3,500. Next, we deduct mandatory business protection. General liability and workers' compensation insurance claim $5,200. State license renewals, mandatory continuing education, and invoicing software take $1,800. This leaves an adjusted pre-tax business profit of $73,000. Now, taxes and personal coverage apply. The 15.3% self-employment tax takes $11,169. Federal and state income taxes take $10,220 because there are no corporate benefits. Private health insurance and disability coverage deduct $6,500. The final result? Out of $95,000 in gross headline billings, the tradesperson's actual spendable, post-tax liquid take-home pay is $45,111 a year, or $3,759 a month. When you factor in 2,800 total hours logged between field labor, driving, quoting jobs, and admin work, their effective liquid compensation comes out to $16.11 an hour. Learning a skilled trade remains a noble, vital path that offers valuable practical independence and freedom from traditional office life. But the idea that it is an effortless route to six-figure wealth is a myth. Success in the trades requires operating as a disciplined business manager, accounting for heavy overhead, and preparing for the physical toll that comes with the job. If you're a licensed tradesperson, how does your net take-home compare after van overhead, tools, and self-employment taxes? Let me know in the comments below. Thanks for watching, and next time, we're auditing what a member of Congress actually keeps after DC living costs. Subscribe so you don't miss it.